Welcome to the Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today we're going to look at one of the most popular stocks in the world stock market, especially the American Stock Exchange. Actually, it's over the counter, but it's Apple Computer. And the question is, you own the phone, you own the tablet, you own the laptop. Do you want to own the shares? You may already own them. You may have told your friends you own them and you didn't, which would be a bit of a shame since Apple Computer in the stock market is as big a success as the iPhone or the MacBook Pro or any of its many other products. What are we going to do? Let's look at some of the basics. What's this company trade at? $125 a share. Is that expensive or is it cheap? Well, I think we could make an argument that it's somewhat cheap. The price-earnings ratio of this company is 13 times. In this stock market, that would almost be a value stock. The market capitalization of Apple is an incredible $730 billion. That shows you the run of the shares since 2008. But consider this about Apple. If you decided in 1985 that Steve Jobs was a genius, you loved his computer, you think, I got to own this stock, I love what he does. From 1985 until 2008, you would have made almost no money. You probably would have lost money. So, as they say in the markets, timing is everything. What makes Apple such an extraordinary story is not just that the price has gone up to $125 per share, but that it's a cash mountain. $60 billion roughly is the free cash flow of Apple. And in the last 3 years, the company has thrown off $160 billion. So you can enjoy the iPhone, you can enjoy the laptop, and if you own the shares, you're buying an incredible cash-producing franchise. Let me show you this. Just in the last quarter, $30 billion. But maybe that's yesterday's story. You know, on Wall Street, there's the question, what did you do for me lately? And what lately Apple's done is come up with an iWatch. You're taking your computer and like Dick Tracy, you get your phone calls, you get your mail, you get your texts on your wrist. Keep in mind that Apple could lose $1 billion a year on the iWatch and maybe in 100 or 200 years go broke. This is not betting the ranch in any way. It's a nice product. Maybe it'll sell, maybe it won't sell. I would argue that what they're doing with the iWatch is amusing the masses until another product comes along that it'll be even more seductive than the iPhone 6, 7, 8, 9, whichever comes your way. Now the question is, if you own the stock, do you sell it? If you don't own it, do you buy it? My concern with Apple is this. It trades at a very hefty 5 times book value, and there's a lot of goodwill built into the ownership of Apple shares. Let's face it, if earnings went from $7 a share to say $5 a share, you'd be at a PE of perhaps over 30 times, which it's not. The great story of Apple is the earnings have matched everybody's expectations. So yes, $125 to many investors looks like a bargain, especially if it keeps growing at 30% a year as it has. If the return on equity, think about it, return on equity for Apple shares is about, I don't know what I'd put it at, 35%. Incredible number. So as much as you dream about making millions with Apple shares, it keeps matching your expectations. Do I think, as your advisor here on this show, that it's something that you want to buy? I find it a little expensive. I think that it's only had good news. It's only had cash coming out its ears. And it's a fashion statement. I think it's a very well-managed fashion statement. I think it's a very successful company. And I like the PE at 13 or even 15 below the S&P. But I think if we're going to make money in the 3 to 5 years that we're going to look at your money here on the Investment Advisor, we're going to try to find some that the story is to come rather than the story that's been. Well, that's all the time we have today on the Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.